Well, for more on the IPO market, let's get insights from Louis Wan, his CIO of Pride Investments in Hong Kong. His China Pride Fund has outperformed the benchmark index, ranking in 95th percentile for one-year returns. Louis, is this really the right time for the resumption of IPOs?
I guess when given the improvement in the market sentiment, we are expecting the IPO will be very active in the coming few months.
But how big do you expect these IPOs to be? Where will interest come from? More institutional, retail?
I guess most of the IPOs would be smaller in size when compared with the 2006, because right now most of the big financial institutions has been listed, I guess. So in terms of the fundraising amount, that would be significantly less than that in 2006 or 2007. But in terms of the number of IPOs, we are expecting to be increasing, but everything depends on the market sentiment.
And we have some estimates here suggesting as many as 31 companies up for IPO, raising about, $10 billion. Is that concern perhaps that could be a flood of supply?
Yes, because as we know, the IPO market has been inactive for 9 months or for 1 year. So right now, a lot of companies are just queuing up for the IPO, are waiting for the improvement in the market sentiment. So we are expecting a lot of company. In terms of IPO supply, there will be a lot, but whether they can be successfully listed, it will still be questionable, but everything depends on the market sentiment. But in terms of the big IPOs, we are expecting some of the financial institutions come from China, may be listed in Hong Kong using the A+H that method of IPO listing, for example, the China Everbright Bank.
So what, in terms of momentum, do you see it picking up the way it did a year ago? Given that the rally that we're seeing right now, it's mainly due to liquidity?
Yes, we will agree that right now the market is driven, the current momentum is driven by the liquidity. The liquidity mainly comes from the bank loans from the China and a lot of the depositors from Hong Kong, because the interest rate is quite low, it's basically zero. So a lot of saving deposits has been rushed to the market, and also some of the investors is afraid that the inflation will be coming out in the coming 1 year, so they want to buy the assets instead of placing their money as a deposit.
Okay, Louis, as an investor, I mean, like if there are lots and lots of IPOs coming up, what should I be looking out for? I mean, which should be the best bets?
I guess we are still very positive on the financial sector. Including the banks and insurance. For the coming, I would say, coming 7 months, we are expecting there will be maybe two Chinese banks will be listed. The one is a Minsheng Bank, and the other is a China Everbright Bank. There will be two banks who will be listed in the Hong Kong market. So given that there are a handsome loan growth in China, and when every country is currently experiencing the deleveraging process, but in China we are facing the re-leveraging process. So the bank as the lender, I would say there will be the key beneficiaries. In addition to that, the bad debt ratio we are expecting to be still can keep at the low level, because for this year, even though we will see a huge amount of loan growth in the market by the government, but in terms of quality, we are still very positive about the quality about the newly granted loans, given that most of the big projects are guaranteed by the government.
All right, Louis Wan, Pride Investments Group. We'll be right back with him in just a moment. For now, though, let's take stock of the market and look at the markets opened in the region. We have Japan and South Korea in negative territory. The Nikkei 225 down by 1.9%. The Topix lower by 2.5%, and the Kospi sliding about 0.7%. The same story for the South. We have the ASX Trend Index, by the way, down by 0.9%. The benchmark in New Zealand lower by 0.8%. In Taiwan, Singapore and Malaysia, we have the TAIEX bucking the trend, currently in positive territory. The STI and the KLCI are down. Trading just underway in Shanghai and the PCOM. Let's do a check on those benchmarks. They're in the red as well. Now let's do a check on China's biggest companies by market value. PetroChina, ICBC, China Construction Bank, Bank of China, and Sinopec. They're all in the red, as you can see from your screen. And by the way, 8 of the 10 sectors on the MSCI are in negative territory as well. The biggest loser today, materials, followed by finance and consumer discretionary. The trade, we're back in 2. Stay with us.